Live to CommSec for a look at the markets now. Tom Piotrowski joins us live. What sort of a morning is it going to be, Tom?
Pete, we're going to be at a deficit this morning when the market kicks off, down by 1/3%, or about 25 points in terms of the lack of progress, if you like, where the SPY is concerned. And that's reflecting what was a generally weaker or at least cautious session where Northern Hemisphere markets are concerned, because in the next day or so, we will see an interest rate decision from the US Federal Reserve. They're widely expected to do nothing. But look, there have been some changes in recent weeks in terms of the outlook for inflation by virtue of the oil price, and that was really one of the big talking points last night, Pete. So I'll just quickly run through the fortunes of the US market. The Dow was up by 6 points. We had the S&P 500 up by around 0.1%, and the Nasdaq just in positive territory by the barest of margins. Decent move higher for short-term interest rates in the US, but it's the oil price, as I said, that's the sticking point. So at one stage, we had it just short of $93 a barrel for the US benchmark, up by close to 4%. It's above $92 per barrel at the moment, consolidating at the upper end of a 10-month range, Pete, and that's going to be unsettling a lot of investors who were hoping that perhaps we may have seen the worst of inflation, but that was all predicated on what was going to happen with inflation prices. So at the very least, this is stoking a conversation about interest rates at least remaining higher for longer, and that could potentially be troubling as we move into the back end of the week. European markets generally weaker. Also, the UK market down 0.75%, the German market down by 1%, the Stock 600 index down by more than 1%. The Aussie dollar, as we speak right now, it's trading at 64.4 US cents.
Okay, Tom, thank you.